Market update on the 21st, doing it pretty early today. We're melting up here, and we've confirmed that we are done with this downtrend. And so we can look at what the next most likely destinations are. I think there's a chance we could get up all the way up to 388 today, potentially all the way up to 389 if it keeps on going. Seems like a pretty big rally. The other possibility is we pull back and the 1.61 fib after that would be 392. That's a possibility too. Got to think too. There is a possibility that we could just come up here, hit 392, and be short of the 50% retracement, or it holds in this zone right here. So there's another supply zone right here from this move right here. So we have from 380, 359 all the way to 390.37. So if that's the case, there's potential that I think this is going to be a 5-wave move, but there's potential it's just a short second wave. So we have to just watch and see what happens over the next rest of the day and see how it pulls back or if it keeps on going. I'm still looking though. I still think we're going to go to 394 just because if you look at the 20-day moving average, not only is it the right retracement for the second wave, look at this move right here, 348. We were actually closer. No, we were 20 points lower than the 20 DMA. Immediately come up and go across it. And that was the start of an uptrend. It's a little bit different. But the same thing here. We're at 378. 20 DMA is basically 20 points below it. I think at the minimum, if we even go back to like lower, let's look at these right here. If I can get this to 20 DMA right here, 396 was even lower than that, and it came up and touched it. So it has with the 20 DMA, it always is around it, going over it, touching it, and pretty much every downtrend starts with a touch of the 20 DMA. So the fact that we are already this far below the 20 DMA, I think that this could melt up all the way to, like I've been talking about in the past videos, 395, 396, and then move down after that. So we still got a ways to go, but it is touching the 50 DMA. Did it hit it exactly? It almost hit the 50 DMA here at 386.87. So that might be a good spot if you have calls, something like that, to take some profit. Wait for a pullback, and then the next move after that, let's say it goes to 387. Then we're looking for 392.58 and then probably the 20 DMA. And by the time it gets there, the 20 DMA might be a little bit lower. So 394 might be the perfect spot for this to hit. But then we also have that supply zone at 396. So we'll have to just watch it. This move on lower time frames is going a lot higher than expected because it's already past the 1.61 fib. If we zoom in here on lower time frames, I'm just trying to look at it and see if it's actually a possibility that we're looking at a 5-wave move here. But that is not the case because we got this expanded flat right here. So it looks like WXY, really. WX, maybe Y right here. So these are all ABC patterns. And then we get another move back here. So the whole thing would be WX working on Y. And Y could be a 5-wave move, and we're getting that, I think. We're getting, this doesn't look like a 5-wave move either, though. I think it's like a double 3 pattern. Just everything is 1, 2, 3, pullback, 1, 2, 3, pullback. So on this, it looks like it could potentially have topped too. But we'll have to see how many times this pattern goes. It could be a triple 3, could be a double 3. We'll see, but I would look at the 50 DMA here at 387 as being a point we could hit and top out, and then pull back and then go higher to the 20 DMA. So when it gets in these melt up modes, it's kind of like technical analysis on like Elliott wave is kind of hard to read on lower time frames because it's just random, corrective moves higher. We're not getting any impulsive moves higher really this whole year. And so basically you got to go on higher time frames too and look at the DMAs and where you think it could go based on fibs. And so 387 pullback and then look for 395 as the most likely scenario. If we fell from here, it just doesn't seem like it would make sense first. There's too many puts. People are buying puts. They need to shake the people out too. So I think that it makes sense if we go up here to at least 394. But the dollar of Tesla, get Tesla real quick. Tesla bounced and then coming back. I think that's another thing that could help SPY go higher. Is Tesla is ready for a bounce. And so if Tesla comes to the 20 DMA, that's only at, or that's up at, get rid of this, 172. I'm not sure if it's going to go that high, but 20 DMA is there, so that's a possibility. And then you got the 50 way up here, and the, that's a 200 way up here. So I think that this could even come up here to the 20. It's a little bit farther than I thought it would go, but let's just see if that even makes sense. That would be too big of a jump, unless this ends up being, that would probably be too big of a jump, 172. So I don't know if this is going to hit its 20 DMA anytime soon, but I still think it can go to 150 to 160 on a bounce. So I'm scaling into my long-term puts too. I just buy like one contract every $4 or $5, and I'm going to do that all the way up to 395. Then maybe make my biggest purchase up here, and I have them out like 3 or 4 months, and I'll be ready for the next move lower if it happens. And I have calls, sold puts, so I'm just going to cash those as we go up higher. So that's pretty much it. Just a quick update, and I think that's it for now. I'll do an update after the market closes. All right.